Welcome to our Q4 FY18 earnings call. As you are aware, the Indian accounting standards are applicable to our company from the period commencing from April 1st, 2016. Therefore, certain key operating entities like the World City in Chennai, the World City in Jaipur, Mahindra Homes, which is the Stancy joint venture, the Bebenco Developers Limited, which is the Nagpur project, and Mahindra Happiness Developers Limited, which is the joint venture with HDFC for affordable housing, are no longer consolidated on a line-by-line basis, but on the basis of equity method of consolidation. During the quarter, the company launched Happiness Palghar, which was its third affordable housing project and its very first under the platform with HDFC Capital. We are happy to share with you that we sold over 389 units in 45 days of launch, and at the moment we stand at over 500 units sold in less than 60 days of launch. Completion during the quarter has been about 0.33 million square feet in the company across projects like Anthea and Happiness Boisar. In terms of consolidated results, following are the key highlights. The consolidated total income was 180.6 crores for the quarter as against 185.6 crores in the previous quarter and 342 crores in Q4 FY17, which included a one-time 177 crores income coming in from the sale of a property in Nepean Sea Road. The consolidated PAT post-minority interest was at 47.8 crores for the quarter compared to 26 crores in the previous quarter and 17 crores in FY17 Q4. The residential business achieved its highest quarterly sales with 650 units being sold during the quarter, that is 0.4 million square feet, amounting to 191 crores of sales. Launch of Happiness Palghar was a significant contributor to these numbers. 56% of volume sold during the quarter has been below the 50 lakhs price point, but what is good to note is that we have seen an increase in sales also from other price points going right up to 2 crores. 28% of total sales came in from finished goods, and during the year we completed handover of 1,600 units, a little over 300 of which happening in Q4. In the World City business, we had 6 customers signing up, 5 in Jaipur, 4 of them new and 1 existing, and 1 new customer at the World City in Chennai. Across these 6 customers, we had a total sale of 18 acres for the quarter. We also sold during the quarter the commercial complex at the World City in Chennai, which is Canopy, in line with our approach on focusing on core assets. Another sale which took place during the quarter in the residential business was the Nasik land, which again being not a focus market for us, we went ahead and disposed that asset. I would now request Jayan to take you through the financial performance for the quarter.
Thank you, Anita. Good morning, everyone. EBITDA margin for Q4 FY18 stood at 41% versus 9.8% in Q4 of FY17 and 24% in Q3 of FY18. The PAT margin for Q4 FY18 stood at 26.7% versus 5.1% in Q4 of FY17 versus 14% in Q3 FY18. EBITDA margins improved significantly due to better operational performance and substantial contribution from associates. These factors have also led to improvement in PAT margin. With the continuous focused efforts, company has reduced its consolidated cost of debt from over 10% as of March 17 to 9.36% as of March 18. I would now like to throw the floor open for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, thanks for giving us the opportunity. I just wanted to clarify Nasik land and this canopy. What is the sale amount?
So Nasik land, the sale value was about 24 crores and canopy was 15 crores.
15 crores, okay.
5 for canopy and 24 for Nasik.
Okay. Secondly, just on this new Mumbai development plan which has now been approved this week. So what is the visibility now on our launches, especially in City of Mumbai?
The new DP had no impact in terms of our launches. It would be more relevant to us going forward because all our existing launches that are due to happen do have their IODs in place under the old DP. So therefore no impact in terms of delays. Positive impact in terms of the dumping ground matter being sorted out in March by the High Court, and therefore we have already initiated revalidation of all the approvals that are required for us to be able to first launch our Kandivali project. As far as the height matter is concerned, we are expecting final approvals in the next month or so with respect to the Andheri project, and so that would follow thereafter in terms of launch.
Okay. Okay. So, ma'am, in an overall context now, what is the overall area that you are looking to launch in the next financial year? And would you like to share some sort of sales guidance or overall sales which the company is targeting?
In terms of new launches, that adds up, and when I say new launches, I'm talking about brand new launches, not launches of phases of existing projects. So brand new launches, the 5 projects that are scheduled to be launched are around 2 million square feet of development. These we expect to see getting into active mode in this financial year. Guidance, we don't normally share a guidance on sales, but yes, these launches are across diverse markets. We would like to see the approach taken for Palghar being followed through in all of those launches. And on the other ongoing projects, we generally have been able to see sustenance sales year-on-year basis of around 500 to 600 crores. So if you look at last year's performance, it's been around 600 crores of sustenance sales.
Okay. So any longer-term target or guidance, volumes or anything which you would like to get to?
We really wouldn't be able to get into that.
Okay. And lastly, on the business development side, any progress on anything, and do we expect to hear some announcements in the latter half of the year?
We have MOUs in place for about 2.7 million square feet of deals. We should be in a position to announce a couple of them in the immediate future, and then the balance possibly in the following quarter.
Okay. Okay, that's it from my side. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. We'll take the next question from the line of Himanshu Upadhyay from DHFL Pramerica Mutual Fund. Please go ahead.
Yeah, good afternoon. I have one question on the MMR projects, the 3 Sakinaka, Andheri and Kandivali, which are absolutely new projects. What approvals are pending for these 3 projects, and limelight, can you throw some light on by when can these projects be launched? The 3 MMR specifically.
The Andheri project is concerned, we have all our approvals in place except the additional height confirmation. We do have an IOD and a CC in place there. We have built up to the plinth, but we need the additional height confirmation, which we think should go through in the month of May based on what the High Court has determined recently in early April. That's the approval that is pending as far as Andheri 2 is concerned. In terms of Kandivali, again, we do have a base IOD in place, but since it was under the dumping ground matter, which is post March 16 in terms of having received its approvals, with the matter now being sorted out in the court, we have initiated the process of getting our waste management NOCs. There are new requirements under the High Court resolution. Those are under process as we speak, and once those are in place, we will be able to revalidate the IOD and move towards the launch. We are targeting a Q1 launch there. As far as Sakinaka is concerned, it had a combination of both issues, the dumping ground and the height matter. So the dumping ground is the same pathway as what I described for Kandivali. As far as the height there is concerned, we still have the height verification pending to be done by the airport authorities, which they will now come in and do with the matter being resolved. And then we get the NOC for that and we should be able to proceed forward on that one.
Okay. Thank you. And the Chennai, the new projects what we want to do in Mahindra World City, the 0.9 and 0.41 million. So these will be single phase launches means, and because Chennai was generally a slow moving market, what we were continuously saying. So are we seeing market improving big time? Because the new projects what we are saying is significant. Out of three what we are saying, 3 million square feet of launches, 1.3 million square feet would be in Chennai. So can you throw some light on how are we looking at that market, and are we finding the market being more vibrant right now?
So I was referring to 2 million square feet of targeted launches. The third plot that you mentioned, second plot that you mentioned in Chennai, which is P25, will not be taken up for launch this year. We are focusing on the P17 launch. That is in advanced stages of approvals. We're expecting final clearances from a MOEF perspective, and then we should be in a position to move forward on launch. We would not take up 0.9 immediately for launch. I mean, the way we've always approached launches is to take up a subset of the total project, launch it, sell it, and start construction so that we have cash flows running concurrently. So we should be able to take up about half of it during the year for launch. And obviously, if response is good, we should be able to take up more. But currently, the plan is to be able to take up half during the year. Since you mentioned the other launches, I think the fifth one that I forgot to speak about was the one in Pimpri in Pune, which is the F1 plot. That has received all its approvals except the MOEF clearances, which are in the last stages of MOEF approvals. That's again something which we should be able to launch in the near future.
Okay. And this Pune project La Artista, so we have, I think it was around having 18 units to sell. So 8 we have already sold in the market, means in the last quarter, and 10 are remaining. So are we selling that individual units, or earlier we were thinking of lump sum selling the whole building? So
it's 21 units, out of it 16 units is our share, 5 units was deferred, was consideration to landowner in the form of units, which we've already handed over to him. Out of 16 we've sold, we had sold 6 as of the year end, we've sold 8 as of now, and we have another 8 to be sold. We're selling it on an individual to individual end user basis, not as a bulk to a retail investor.
And ma'am, can you throw some light on new project additions? And one more thing, we keep on hearing from a lot of market participants that a lot of people are coming for JDs and JVs, landowners or erstwhile builders who. So what is the sense you are getting in? And we wanted to grow the business. So how are you looking at the market, and where are we right now in terms of new project acquisitions?
So as I had mentioned to the earlier participant, we have MOUs for about 2.75 million square feet, which are currently under various stages of diligence, out of which 3 are very advanced. We are looking to close at least 2 of them this quarter and the balance in the next quarter. If you look at these 5 itself, about 3 of them are from landowners who were earlier into development themselves and are looking at opportunities by which they can partner with corporate developers and not necessarily take up development themselves. So the structure there also is where we do pay part consideration upfront and the balance upon receipt of approvals. And they are taking responsibility for the approvals so that we can get the approvals in faster. So therefore, to answer your larger question, yes, we definitely are seeing more and more developers of the small and mid-sized category who are looking to either monetize their lands or get into partnerships with reputed organizations to be able to get faster cash flows coming in for them also. And we definitely will actively pursue this route as a way to add to our inventory and growth.
And on the affordable housing, the HDFC platform, what is the progress on new launches or addition on that side? Means the Palghar is already there, but any other project additions on that side?
So as you rightly mentioned, Palghar was the first project that the platform has invested in together. We had transferred the land from MLDL to the platform. That has since been launched. We now look at getting our next project going. So out of the 5 MOUs that I mentioned to you, we do have one which is for affordable housing. That's about 0.85 million square feet, which is in the public notice stage, so final stages of diligence. We should be in a position to execute that in the month of May.
Okay. Thank you from my side. Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Kunal Lakhan from Axis Capital. Please go ahead.
Hi, good evening. Just wanted to understand...
Sorry to interrupt, Mr. Lakhan. Sir, can you speak a bit louder? We're not able to hear you.
Sure. On asset monetization front, have we given some thought in terms of monetizing our other commercial assets which we are holding, like say Wall or Mahindra Towers in Delhi?
Not at the moment. I think Mahindra Towers in Delhi, we have a stable customer. We do get in good rentals. It is a profitable commercial project for us. And we will continue to hold it currently in our books. Evolve, we will look at the opportunities that come our way as we go along, but at the moment there is about 400,000 square feet of stabilized rental assets which continue to accrue annuity income to the University of Jaipur.
Fair enough. Secondly, just wanted to understand on the Palghar side, how is our pricing strategy here going to be going ahead? We have sold decent amount of inventory this quarter. How are we going to maintain price hikes, and how do we hedge ourselves against any cost inflation over the next 3 years that will take to deliver the project?
So first of all, I think when we've looked at affordable housing as an offering, we clearly look at how we can sell maximum at a fixed price rather than looking at price escalation being a hedge, because at a certain point in time then you cross the threshold of affordability and sales slows down. Your incremental cost on sales and marketing is too high when you have residual inventory left, so the focus definitely is on maximum sales at a fixed price right up front. There will be some increases, yes, but I wouldn't look at that from an inflation perspective. Clearly the question is how strongly committed are to our...
The operator. Ladies and gentlemen, we seem to have lost the audio from the management's end. You're requested to stay connected while we try to regain the audio. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, ma'am.
Yeah, thank you and sorry for that. I don't know when we dropped out. There was a query around the Palghar launch. I did speak about the fact that the focus is on getting as much volumes as possible in at a fixed price so that you're not dealing with affordability creep over a period of time and increasing sales and marketing costs. So the launch has been in line with that strategy. Therefore, the question around how do we ensure costs are within the budgeted numbers, we do have today price discovery on cost for most of the cost structures. So the civil contract has already been tendered. The electrical contract, plumbing contract have all been closed. The entire GFC drawings for the project are in place. Therefore, we really do not expect any surprises around cost and will be able to meet the budgeted profitability for the project in line with the approach we've taken for price and cost.
Sure, that's helpful. Secondly, have we earmarked any other land besides the Nashik land that we sold this quarter that could come up for sale in coming quarters?
Not at the moment, no.
Okay, and lastly, one question for Jayant. If you look at last 2 quarters, our cost of debt has been increasing marginally though, but so how should we look at this number now going ahead? Like, have we basically has the cost of borrowing bottomed out and it should going forward? It should just keep inching up?
Yes, can you hear me?
Yes, I can hear you.
Yeah. So cost of borrowing, if you see for last quarter, it is actually purely in line with hardening of the base rate itself of the bank, because most of our borrowing has been from the banks and to an extent whatever is there, as we know, from NCD. And these rates are floating rates and it is in line with that. However, on 4th of April, we already repaid the NCD of 200 crore, which was the last tranche of our 500 crore NCD, which was at 10.75%. So obviously in next quarter, we will see that reflected much better than the current quarter.
Sure. And one last question. How was the accounting treatment for the Nashik land and the sale of the commercial complex?
So Nashik land sale is purely an operational income because it is always part of our inventory. While the sale of commercial complex in World City, Chennai has been a sale of fixed asset, therefore that forms part of the other income for the quarter.
Great, that's helpful. Thanks so much and all the best.
Thanks.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. A reminder to the participants on the conference, anyone wishing to ask a question may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. We'll take the next question from the line of Sagar Arya from White Oak Capital. Please go ahead. Sagar, your line is unmuted. Please go ahead. Sagar, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Faisal Zubair Hawa from Hawa Investments. Please go ahead.
Hello?
Yes.
Hello? Yeah. As to the MD Anita Arvindas. Hello?
Yes, I'm speaking.
Yeah. So about this new project mining, you just said that around 27.5 million square feet has been, MOUs have been signed. So how soon you feel that this could reflect in our revenues? That's one. Second question is, or shall I just ask all the questions first?
Yeah, sure. Go ahead.
Yeah. So, have we had much progress in, talking to developers who are in other cities who are also now struggling for funds or permissions and stuff, and where the Mahindra brand could easily rescue them? And are we looking at certain models like how Piramal Realty has done, wherein they have not only arranged finance for these developers, but they have also arranged finance for the final home buyers, and they have also put their own name onto the unveil. So in that respect, the company like Piramal has almost reached, like, they'll be almost reaching 1,000 crores turnover by the next FY. So, which is, almost what we have done over so many years. So are we looking at that kind of model? Because with HDFC's tie-up, even with our relations with Kotak Bank, I mean, some things like this could be, fired up. Second is, do we look at other competitors like Lodha or even Oberoi Realty, who have really grown very substantially over the years, and which could serve as models to us. Third is, I had the good fortune of visiting World City in the month of March, and to say the least, I thought it was a wonderful development, fully sustainable, and really adding value to industry, to society. The only grouse I felt is that we are still a bit slow in really getting out revenue, and they did tell me that they are going to have a perfect plan in place for the residential development, which will lead to a substantial increase in their sales too. So is that plan now in place, and who are the consultants appointed, and what is the potential revenue in terms of square feet that we see there? And also if there is some kind of a ballpark figure as to what the per square feet realization could be. Third question is about affordable housing. Apart from Palghar and in Bombay, do we feel that any other city carries a lot of potential for affordable housing? And are we doing any kind of liaising with government and other to wire up financing for our final buyers? And last question is about the Ahmedabad project. Is there any progress on that? Have we started the plotting and the permissions? And which FY do you feel that there will be revenues from this project? That's all from mine.
Thank you. That's a lot of questions. We'll attempt to answer them. First of all, thank you for your feedback on World City Jaipur. It's always gratifying when we have our investors and partners going across to take a look at the projects and sharing your feedback. Maybe what we'll do is I'll request Sangeeta to walk you through your questions around Jaipur Residential, Ahmedabad, and also the future focus around distressed assets possibility. And then we'll just quickly cover up on the 2.7 million. Maybe that I'll just quickly address. It's not 27 million, it's 2.7 million. Okay, that we have tied up in terms of current MOUs, and obviously there's scope for us to do much more. Sangeeta.
Hi, Faisal.
Yes. Hi, Sangeeta. How are you?
I'm good. So, as Anita said, I reiterate, welcome to Mahindra World City Jaipur, and it's good you found that place good and enriching. So, as far as the World City, one good news is that we should be, getting ready with our multi-product SEZ soon. And so we will have a broad spectrum that will help us to further accelerate our sales in the industrial zone. So that's about, and the DTA also, we are getting leads. So that's about the industrial. As far as the residential and social, I totally resonate your sentiments about that being a real good potential for us to showcase ourselves as a fully integrated city. So the master plan for that is on. You are aware that we have already, without launching the project, got a large customer in form of an educational institution, India's first skill university already in place. So the vibes and the interests are positive. So what we are looking at is, of course, the market, residential market as well as the social infra. So our combination will, our approach towards that part of the land use will be both for residential and social. as is want of all Mahindra Lifespace's residential projects, we shall be positioning our projects in the zone in such a way that customers do find that as a place where if they are fully saturated in the downtown of Jaipur, they find this as the next best place. That's how this whole offering is being positioned. So we are hopeful that, if not soon, but sometime later in the year, in the financial year, we should be coming out with more news for all of you of how we are looking at this project. As far as Ahmedabad goes, advanced stages of getting approvals from various entities, water, power, plan, layout, etc. We should be launching the project later in this financial year. So that's about the Ahmedabad project. Good vibes, good interest, because people have seen our Mahindra World City developments and are confident that this will be a good place to invest in. Distressed asset, totally agree with you, Faisal. That's a very great opportunity. So what we have done is we have put a couple of resources in place who are focusing primarily on the distressed assets which are available in the market. We are at this point mapping what are the kind of projects available, how does it go in sync with our positioning, our approach towards the market, and let's believe that things should work out and we will have more, if not 27.5, we should be more than 2.7 million, which is already in MOU, some more through this route.
No, but have we got the permission that we want to get for the multi-product SEZ? That's one.
Yes.
And what is the number of square feet that we could have potentially as a development for residential? I know that the plan is not made and, you can't really give any kind of figure, but I just need a figure in terms of a range and also, what is the per square feet realization that we could get?
So multi-product SEZ notification is already received. So we shall be announcing that soon and launching that part of the project. As far as the residential master plan goes, we are just now in the throes of the master plan. It would be premature on my part to give you some square feet.
Okay. And Anita,
as you are aware, the social and residential overall layout is around 400 plus acres. And it will have social, and of which 48 acres is already leased out to an educational institution.
Right.
That could give you, and we will have social and residential. A major part of that layout will have residential.
Okay. So around 350 will be residential. Out of that, you may have spaces for open gardens and stuff like that.
You see, garden, in any layout like this, if you have 450 acres, 2/3, 1/3 is how you have saleable versus non-saleable. So your 350 desire is first of all scuttled out, because out of 450, 2/3 is 300, isn't it?
Right.
And of which already 50 has been sold out to, leased out to an educational institution.
Correct.
So I don't want to get into further mathematics, but the 350 is not happening.
Right. So, Anita ma'am, if you just could address the strategy, as opposed to Piramal reality or Lodha, that, where the speed is much better and, the value creation is also bigger in their company.
Yeah, I think, Faisal, we've discussed this and the focus is really on getting more pipeline on the table. We have our first 2.7 million that we are working on to get to closure in the next few months. As we speak, we are definitely pursuing new pipeline. We have bid for new land parcels in MMR. We've also are in the process of negotiation for new land parcels in Bangalore and Pune. As each of these fructify, we will be able to add more to the portfolio. We are cognizant of the fact that we need to grow at a much faster pace than we have in the last few years. We also understand that this is an opportunity for us, given the fact that in a post-RERA environment, in a post-GST environment, the stakes definitely are stacked in favor of developers who focused on execution, who focused on the customer, and who carry a great deal of trust as a brand. We wouldn't want to lose that opportunity.
So this 2.75 million square feet can come into revenue by, say, 1920 probably.
Yes, that would be right.
Okay. Thank you very much for your time, ma'am.
Thanks.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, in order to ask a question, you may please press star and 1. We'll take the next question from the line of Deepan Kapadia from KDK Capital. Please go ahead.
Hello, ma'am. I wanted to know, in the last con call, we were talking about developing something like 7 million across 5 to 10 years. How is the plan shaping up for the same?
Sorry, I didn't get the question.
In the last con call, we were talking about developing 7 million square feet across 5 to 7 years in different cities. So, can I have something on how are we thinking on those plans and the development area right now under with us?
I think we spoke about this with reference to the earlier participants also. I do not recall a specific reference to a number. But
Okay.
yes, the idea is to grow significantly in terms of the deals that we add to our kitty. We have multiple projects getting over. We have 5 launches scheduled in the next few months. We have 2.7 million square feet of MOUs that we need to convert into conveyances in our favor and into launches in the market, plus we look forward to adding more.
Okay.
So if you look at what is scheduled to be launched, that's about 2 million. If you look at what is in the shape of MOUs, that's another 2.7 million. At this point in time, we have visibility on 4.7 million therefore.
Okay, ma'am. Okay, fair point. Thank you. Thanks a lot for that. But this largely the view is still in place that we're looking at 7 million. Am I right in my assumption?
I don't know where the number came from. Let's just look at it as I mentioned earlier, we definitely would like to see much greater CAGR growth than we've had over the last several years. So whether that is 7, whether that is 10, whether that is somewhere in between or less than that, let's just start getting the first 2 million launched and the 2.7 million fructified into future pipeline of the near future, and then we'll keep updating you as we go along.
Okay. Thank you, ma'am. Thanks a lot. That's it from my side.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to the management for their closing comments.
Thank you. And as rightly mentioned by many of you, the focus for us also in the next couple of quarters will be to get the 2 million square feet launched and get the 2.7 million MOUs converted, while simultaneously building a new deal pipeline beyond this 4.7 million. We also look at the fact that in the world cities, besides the residual inventory left in Chennai and the opportunity in Jaipur being now opened up with the multi-product SEZ for us to do more, we have Ahmedabad and the North Chennai, which will go into the pipeline, and the endeavor will be between the 4 locations to increase the sales throughput from the world cities, as this also significantly contributes to the bottom line of the company. So yearly the focus is on, in the residential business, creating the supply pipeline for the sales team, both in terms of launches and new land parcels, and in the world cities, pushing the traction of current sales to higher numbers. Thank you.
Thank you.